Yesterday was a little interesting. Currently, I don't have much in crypto, but Bitcoin and Ethereum were how I made my first million. So, out of interest, I do try and pay attention to crypto markets in my peripherals. The setup for yesterday started on Thursday, October 9th, when China announced it's expanding its rare earth export controls, adding holmium, erbium, thulium, europium, and ytterbium, which now makes 12 of 17 crucial processed rare earth exports controlled. The main problem being that the US is plentiful in raw rare earth minerals but lacks the production capacity to process them at the moment. This was largely unexpected under the terms of the current US China trade deal and caught the administration off guard. So on Friday, October 10th at 4:50 p.m. Eastern Time, President Trump released a tweet stating the export controls were unacceptable and threatened a 100% tariff against China starting November 1st, as well as export controls on critical software. There was also a scheduled White House press conference at 5 p.m., but it didn't start until 5:30 p.m. But in the meantime, this is when the shit hit the fan in the crypto markets and the bloodbath started. There was an initial sell-off, then a chain of cascading sell-offs starting at 4:50 p.m. Eastern Time and ending at 5:30. This caused a liquidation of over $19 billion in the crypto market, over 10 times larger than the FTX caused crypto liquidation event. Approximately 1.6 million crypto accounts or traders were essentially zeroed out, and it wasn't just the longs. Ironically, some of the shorts were even squeezed, which is unfortunate. But I mean, look at this poor guy's trade right here. And before I go into that, I wanna quickly talk about leverage. In financial instruments, this means using your funds or assets as collateral to borrow funds and amplify returns. So in this example, let's say I have a balance of $1,000 to trade with. I would use this as collateral, or what is called margin. Select my leverage rate, which in this case is 5x, which gives me $5,000 of purchasing power. What essentially this does is it multiplies my returns or my losses by a factor of 5. If the underlying asset was to increase by 10%, instead of that 10%, I would get 50%. So in this case of $1,000, if I had just invested this normally, that $1,000 would have returned me $100. But in the example of leverage, that would have returned me $500. And what crypto markets do is they allow you to go from 2x leverage all the way to 99 times leverage. This is drastically larger than anything else out there. 4x, depending on what exchanges you use, will allow you to go up to 50 times leverage. But when you come to just like a standard stock brokerage, they'll give you 2x for normal assets, which stocks, and then 3x for certain ETFs. Now, the actual concern about leverage in crypto markets is when it comes to the loss side of the equation. On the lower end side, for a 2 times margin, if the underlying asset was to decrease by 50%, you'd lose everything. On a 5 times margin, if the underlying asset was to decrease by 20%, you'd lose everything. Now, if we amp that up to 50 times margin, if the underlying asset decreases by 2%, you lose everything. If there's a large number of people at 99 times leverage, if the underlying asset decreases by just over 1%, they get liquidated. And then when it comes to the people at 98 times leverage, depending on how many people got liquidated at 99%, it is possible that it would push the people at 98 times leverage to be liquidated as well. And the cascade comes when enough leverage gets liquidated that essentially every multiple underneath them is liquidated until there is no more leverage. Now, this is something that's normal and will occur at higher multiples, but when it comes to the scale of which it did yesterday, it usually catches everyone's attention. So with that out of the way, I'll just get back to one of the example charts. So this Chain Opera AI coin, this was just the poor guy or people who got stuck in this one. So if I go to around 4:50 Eastern Time, where almost the entire crypto market took a dump, this unlucky guy is the one short who got pumped in this situation. So starting at 674, if he had leveraged shorts, there was enough of a price increase to trigger his liquidation. And essentially, this is just a short squeeze until he's zero. So that really sucks. For a more relatable crypto, I'll just take a quick look at Bitcoin. So this is all in 1 minute candles, and this is Friday, October 10th. I'm just trying to zero in on 4:50 p.m. Eastern time. And the price there is approximately $116,985. President Trump's post comes out, within 7 minutes, the price drops to $113,000. Fast forward a few more minutes, and I can't find the exact bottom, but 5:21 p.m. Eastern time, the price had dropped to $109,779. That would be roughly a 6.25% drop, which would have essentially liquidated everyone from 99 times down to 16 times leverage. And you would think there can't be that many people on crypto markets with leverage that high on Bitcoin. That would be a reasonable assumption. Who would do 16 times leverage on Bitcoin? So Bitcoin has a $2.42 trillion market cap, and the amount of liquidations that had occurred in the past 24 hours is 5.22 billion. That's less than 0.25% for the market cap. But that's still a staggering amount, and I don't have access to the amount of accounts or people that were liquidated, which would be an interesting fact, but still 5.22 billion. I would say that this could go anywhere from tens of thousands to hundreds of thousands of people had over 16 times leverage on Bitcoin. So this chart roughly shows crypto performance by sector in 10-minute intervals. Down below, you have the legend for sector, L1, DeFi, AI, L2, meme, and gaming. Now this chart looks drastic, but I believe the person who posted it said that this was not an average of the cryptos in that sector. It was just a static weighting of the amount of decrease in all coins that were in that sector. So had this been weighted by market cap, L1 would have had a significantly better looking graph. This is significant because a large number of coins had dropped 50% in value. That 50% is a magic number that essentially liquidates everyone at 2x margin. That means there's no more leverage for that specific asset in cryptocurrencies. So I kind of had an idea of what was going on yesterday, but when I woke up this morning, typically my X shows, regular assets, stocks, news, world events, but today it was just dominated by crypto. Today's liquidation was almost 20 times larger than the COVID crash, which is crazy to think about. Here are some posts that I came across. They could be fake, shit posting, but essentially people just losing everything that they have. Yeah, it does look a little photoshopped, but it could be real. So where does this leave us? Around 5:30 p.m. Eastern time, Trump started his White House press conference, and after an initial announcement about U.S. pharma favored nation policies, he started addressing tariff questions. And he hinted that he was amenable to taking tariffs off the table, and that he was still scheduled to attend his meeting with Premier Xi in Korea at the end of the month. Now, many have speculated that this crypto liquidation really had nothing to do with Trump, and it was just an excuse to liquidate leveraged traders. Complete speculation. Now we're just in a situation where people are waiting for Monday to see what happens. I hope you found this as entertaining as I did. But if you were one of the unlucky ones out there, no amount of money is worth your sanity or your life. Keep your head up.